Can Bitcoin climb out of this crater? If not, how deep can it go? Oh man, this is not looking good, guys. Hey, it's Keith Allen. That was pretty abrupt stopping the music, but that's okay. We're out of that and into analysis because some major moves, right? We talked about this yesterday, shortly after Monday's Bitcoin daily close. The attempt to RS flip 69K, along with that beautiful technical support we had at the 21-day moving average. They were both not only invalidated, they were annihilated. So we're going to look at some of the warning signs that indicated that move was coming. We talked about that yesterday, and we're going to try and find some clues to determine if the price is likely going to continue or where we might be going from here. Let's get rid of that and into this. And guys, we talked about it yesterday. Last Friday, we had a wick to 68K, like 68.3K. It invalidated the RS slip at 69. I had already called that. And it exposed some weakness at that 21-day moving average. Let me put that chart up and I can kind of talk through this so we can see that. And by the way, I suggest you take a second, grab a pen and paper. You're going to want to take notes during this because we're going to look at a bunch of different potential levels that things could go depending on how things play out here. Obviously, we're looking at a little bit of a hold here at the moment, but I'm not sure that this is going to hold. So let's go ahead and share the screen, and we will talk through, show you on the charts of what I'm talking through here. So we had this. Here we are on the daily chart. We had this on Friday, right? We had this wick down. This is Friday. We had a bit of volatility last week around some of the economic news. Boom, round tripped it pretty much. And then we found support up here. And that, we reclaimed that support, started to see some candles printing above that 69K. That's what we've been looking at for an RS flip. It just has not happened since March, right? Ever since we interacted with that level at 69K, we have just not been able to hold a sustainable move above that level to validate the RS slip. So that was the first sign of weakness. The losing the, wicking through the 21-day moving average, also a sign of weakness. And lo and behold, it occurred. The 21-day moving average was actually just slightly above that 69K level briefly, and you can see here it's already come back down. And so those are signs of weakness, just as this wick between below the 100-day moving average is a sign of weakness, possibly more degradation to come. Of course, it doesn't have to play out that way. Things can change quickly, and I'll get into that a little bit. So some baseline levels that I want to want you guys to be aware of as we move through this is obviously that all-time high is not in play until we get back up above here. So we're going to talk about potential areas of targets for potential landings. If this isn't it, this could indeed be it, but a lot could happen. We have this area of prior consolidation, 58 to 60K. That was into play for a long time. It has been for years. It has been since the previous all-time high, right, where that became a distribution range. And of course, our lower low here at 58.60, and what I'm calling our macro trend line here on this trend since really late last year, November, things started to climb out. So a couple of prior areas of consolidation, the 50 to 52K range, and of course the 40, 45K range, where we spent quite a bit of time here. So in addition to what we saw here in this degradation of the candles, or these levels, I should say, on the daily chart, we also had a new weekly signal from Trend Precognition on the A1 algo down here at the bottom. We saw this dot show up right at the close of this candle. This is a tentative signal until this candle closes. However, it's basically indicating that we don't expect to see price go back above this 71.5K level this week. And that seems to be the case at the moment. Of course, killer whales could change that on us any moment, but this is what we're looking at the moment. And so if we look at the weekly time frame, right, we were over there on the daily a second ago, and we saw that we have currently the 100-day moving average and the 50-day moving average right here. That takes us down to about 66K. We haven't gone down that low yet, keyword yet. And then if we switch over to the weekly chart, we have the 21-week moving average. This is one I really tend to respect. I like this level. It is very important. If we lose this level, to me, this is the first indication that the macro could be softening. Of course, we've got some buffers in between here and there. So this is an early indicator right here. If we lose this level, that's an early indicator. And then, of course, from there, we have the 58 to 60K range. If we lose that, then we have this lower low here. 56.5 was the lower low. And that is something that, well, let's just say bulls don't want to see a lower low. We don't currently have much in the way of liquidity here in that range. Let me zoom out here. And we could talk about this really kind of really actually from probably a good idea to look at this as a from a macro perspective. The one thing I would say about all of these failed attempts, up at the 69K, if it's taught you anything, it should be patience, because there aren't straight lines, not sustainable ones anyways, and moves take time. Sustainable moves take time to develop. Okay, so being patient here, not aping in the second that price moves above or below the line, is usually a safer move than over trading every single little bit of low time frame volatility. So I wouldn't panic at this point, unless maybe you're over leveraged. And if you're over leveraged, let this be a lesson to you. Stop doing that. It is risky. Okay. So now we're zooming out to kind of this wider chart here. On the weeklies, we're looking at these key moving averages and areas of prior support, and on fire charts as well. If we look at a higher time frame, we're going to see that we just don't have the liquidity. And if you follow the stream at any point in time in history, that I talk about this a lot. We just have not seen the kind of liquidity concentrated on the bid side that we need to give us that leg up. All right. Right now, the upside is stacked with asks, and it's very thin right here. We're literally hanging on support here, right at this 65 to 67K level. We have a little bit of bid liquidity here, but I would call it a modest amount at best, right? And then there's a little bit here at this 58 to 60K range. Again, modest at best. And then it really thins out down to 50K, and below that, there's just no sentiment, right? So when we talk about potentially going to any of these prior consolidation levels, I would expect that if price starts moving in that direction, we're going to see bid liquidity and ask liquidity moving, right? Will asks potentially push it down? Will we see bids come in, at the 60K? Will we see them come in the 50K? Or is it just going to be these shorts up here are just going to flush it down as deep as they can, and maybe even challenge the macro trend before we see real substantial bid liquidity like we had down here showing up? So that's kind of the zoomed out view of things, right? We also, of course, have some decent news that the situation for ETFs by and large is still bullish. Yesterday was indeed the first day of negative flows that we've had in almost 3 weeks. I wouldn't panic over that. Okay, this is natural, right? What's unnatural, quite honestly, is 19 or 20 consecutive days, however many it's been, consecutive days of positive flows. So don't be alarmed by one day of negative flows, and we likely will see another one today. I don't know, maybe they want to buy the dip. We'll see how that plays out at the end of the day. But I think it's a time for caution and pause, as we of course have a big Fed day coming up tomorrow, right? So it's very common for us to see this kind of volatility around these FOMC meetings, Fed Chair Powell speeches, and of course, economic data. We have all of those three culminating this week. Of course, Fed Chair Powell speaking tomorrow at 2 p.m. Nobody, I don't think, anticipates a rate cut or a rate hike at this time. It's really all about the tone. Do they still think, is the discussion of a potential hike back on the table? Or is the discussion of a cut coming into focus? Is there any clarity as to when that might happen? It really comes down to Chair Powell's tone, and a lot is revealed in the questions that the media asks him at that press conference. So you really have to read between the lines to see how things are going to shake out. But as we've seen historically, right? We have him coming into focus and sharing some insight with us tomorrow, and then Thursday we have another day of economic data that will either support or invalidate some of the assumptions that he shares with us. So this is really, I think, where the move will play out. Tomorrow we have CPI data coming in the morning. This obviously is important. The core inflation rate data, CPI coming in, and then we will have him speaking in the afternoon. This is 2:30 Eastern Daylight Time, by the way. And then Thursday we have PPI and jobless claims coming in again. And so this is really probably where things settle down, and then we get positioned for whatever the weekend price action is going to be. So be in tune to all of these potential catalysts that could keep price moving, keep the volatility percolating, and send price in either direction. So let's get back to the charts here and the areas of focus, the areas of concern. And one of my concerns is at the moment, you see that we're holding here at the 100-day moving average, which is, around 66, 750-ish. But look at what this looks like in the order book. Not so strong, not a lot here, right? So I don't have a lot of confidence in this, just based on what I'm seeing here at the moment. Now, this could obviously change. Liquidity can appears and disappears at a moment's or without any notice, right? So we have to be alert to that possibility, and also these other ranges down here, right? So it's really like if we lose one level, then we focus on the next. It's as simple as that. So if the 50-day moving average, which is right here around 66, if this doesn't hold, then what am I looking at? As I said, the first one for me is the 21-week moving average, which at the moment is at like 62. These moving averages obviously change every day and time. They're moving, hence the name moving average. So that's the first line of defense there. And that's a good one, right? If you lose that, that's an early warning of well, let's just say bearish things to come. We have this prior area of consolidation, 58 to 60K range, but also that range is rather thin. Okay, 58 to 60. What's that look like? Let's zoom out just a little bit to the monthly. So yeah, there's not a lot here. Currently, only about 16.5 million. Not a lot of confidence in that. Okay. And so then we go back to the charts and we see if we lose this, then we have this lower low. All right. And this lower low is at 56.5. Again, there's not much liquidity in that range at the moment, but if you lose this, you're going to see liquidity moving down, whether it stacks there enough to hold things up, or are these guys with the whales up here with liquidity stacked up here. Now, this is not a liquidation map, but if you look at a liquidation map, and I recommend Kingfisher, he does great work. If you look at his map, then you're going to see a large pool of leveraged shorts up here in the 70 to 75K range. Are those guys closing down here, or are they continuing to push price down to really capitalize on what could end up being a generational short? So watching for that. So that 55, not looking super good. Not was it 55? That's not looking super good to me either here. 56.5. And then, of course, if we lose that level, we have this area, the 50 to 52K range, where we consolidated briefly, really just a few weeks. And then the 40 to 45K range, which to me has been an area that I've called on for a long time. We ripped through this, maybe with a little bit of choreographed help to emerge from this range and to emerge from this range, and those ranges were never retested. So those are things that they don't have to happen, but technically they should. They just haven't. Doesn't mean that they will, but it would be good if they did, just in terms of the health of the structure. So of these two ranges, again, there's no liquidity really that alludes to the fact that, hey, that's the support level that's going to hold, because we're not seeing we're not seeing it in the order book just yet. Let's go to a year, see if we okay, there we go. On the 6 month, we can see down past 40K, and there's just there's no liquidity based sentiment for that move to happen just yet, but nothing changes sentiment like price action. So moving through here, if we should move through this, then you will likely see some bid liquidity moving down into this range. Potentially it stacks here, which to me is a bit more psychological. We just consolidated here very briefly. This range to me is much more impressive. If we go to the year, we could see we definitely spent a lot more time in that range. You can see it here on the yearly chart. And so these are the things that we have to watch to see if they develop. There's literally very, very little down in this range. So watching that very, very closely. Now, again, before you panic, I want you to look at something, and let's go to the macro chart. These blue vertical lines, I haven't shown them in quite some time, but they represent all of the prior halvings in Bitcoin's life. And as we can see, it is common. It's not uncommon at all to see corrections coming off of these consolidations and corrections coming off of these halvings and well into bull markets. Okay, look at this move right here. This is clearly a bull run. We're talking way back in 2012 when Bitcoin was triple digits, but from an all-time high down to a flush, that was an 84% move. I don't anticipate a move that deep at this point. But it's certainly something that you have to be in tune to, where things could go. Just really trying to illustrate that we could have a deep correction. Here's another one, right? This is from the 2016 halving on the run up to the 2017 top. There were several corrections. This one went 31%. Let's move it up here. I mean, this is probably closer to a 40% move, right? Not uncommon. It happened a third time. Not uncommon. This one not as deep, but point is we're seeing multiple double-digit corrections, and we've already seen a 20% correction. We haven't seen that 30 or 40%, and that's something that I called for a lot earlier this year, and it just has not materialized. Doesn't mean it will, but it wouldn't be bad if it did. And same thing. 2020. Did we see some big corrections in coming off of that halving? Absolutely, we did. Okay, here's another one. This was the local top at the time at 12.5. We had spent a lot of time there. It was 22% down from that one. If we went up to this move right here, this looks like 35%, and so on, and then even deeper. So don't panic if these things happen. Be prepared for them to happen. Have dry powder if they should come into play. So at the moment, we have seen, like I said, a little more than a 20% move here. Okay, so 23% so far. If we were to go deeper, if we were to go down to the 50-day moving average, that gets us about 38%. 50-week moving average would get us down to 38%. And if we were to get to the trend line, and of course, remember this trend line changes, right? So if it takes a little time to develop, maybe I don't think it's going to happen today or this week even, but if it develops over time, we're in that 40% range, and that to me is healthy. We've seen it happen historically, and I can't think of a better place. First of all, between these two consolidation levels, we do have some confluence between the 50-day moving average and this consolidation range in the 40 to 45K range. And over time, this may align with the trend line. Where does that align with the trend line? Somewhere around mid to late July, right? So we could conceivably grind down to that level. And imagine this. Imagine that we have price grinding down to here, and we now have confluence with this, 44, 43, 44, 45K range. That to me would be the ultimate test of support. And a hold from here, a bounce from here, to me is what would create the strongest foundation for the most bullish recovery that we could hope for, right? And then from there, again, I don't have any confidence in a move to this all-time high, to take out this all-time high, until we consolidate above this 2021 top, that first RS flip it and then consolidate above this level, then start going after this. That's the long and short of what I'm seeing here, guys. Let me, if you have any questions or comments on that, by all means, chime in before I wrap this up. If you're watching on Twitter or X, whatever you want to call it, I don't care. That's a whole nother issue. I'm not sure that the comments are live over there. Of course, if you do comment there, I will engage with you when I get back on that platform. But the live streams on YouTube, we do have live comments available. So feel free to chime in there anytime you wish. I think, most notably, we've got to look forward to what's happening tomorrow. See if Jay Powell gives us any hints, any indications that things are going to improve in terms of the Fed's outlook and in terms of when we might anticipate cuts. But as you can see, price continuing to break down here at the moment. So I do not have confidence in this 100-day moving average holding. The next level is the 50-day moving average. That's just sub 66K. And as I showed you on the charts, we're not yet seeing much in the way of bid liquidity in that range, moving into that range to give us confidence that it's going to hold either. I mean, there is, and this is even down to 65K. So the 100-day moving average is really up here. It's very, very thin. So I think we're going to see a continued breakdown. And remember, whales love this. They manufacture these moves, right? Coming into these Fed speeches and economic data. So with this liquidity cleared out here, it's essentially a much easier move to pump back up. So don't be surprised if the market gets whipsawed over the next 24, 36 hours or so. Could be very interesting here. There are opportunities, but there's also a lot of risks. So be very careful. Mind your risk management, and know what your invalidations are going to be as you try to navigate this market. Hope this is helping you guys out, right? Nothing I share is advice, but I hope I'm giving you enough insight to help you make some more informed decisions. And if nothing else, keep yourself from getting freaking wrecked, okay? You got to stay in this game for the long haul. And to do that, you need to manage your risk, and you need to be responsible and not, being irresponsibly over leveraged is where probably most people get hurt the most. So be really, really cautious if you're trading with leverage. With that, I'm going to wrap it, guys. If you like the streams, please do me a favor, smash all the buttons. Definitely hit that subscribe button up above. I think it's actually that way. Share a comment by all means. I love the comments. I will engage with each and every one of them. I really appreciate the support you guys have been showing me. So please keep those coming for me. With that, we're going to wrap it here. And if I see anything else developing, as I did last night, I will inform you guys. Okay. Keep in tune to the X channel, because that's where I'm posting a lot of content in between. And last night we saw this move coming and I let you guys know. So with that, I'm going to wrap it. And I will actually be back here a little bit later today. I have another live stream coming up with the Carbon crew. So looking forward to that as well. Stay tuned, guys. Got lots more coming for you. Have a fantastic day.